Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the positions for April the 6th, 2011. Now our first position for tonight is going to be in the May cotton futures contracts. Now this one is a mixed signal, but my opinion is that cotton will remain bullish. So I'm looking for an entry here and to get back into this trend. Now we're sitting here basically flat on the vantage point indicators, but uh, our predicted stochastic and our predicted MACD is still above the zero line, and our predicted stochastic is beginning to turn to the upside. Now, looking at this, we can see we have a fairly significant amount of support building just above this 193 area. Now, looking at our crossovers from Vantage Point, our short-term crossover, excuse me, it's still it's pretty much flat, slightly to the upside. Our medium term cross is to the down and our long term is flat. So we're looking for an indicator that this is going to break higher. Now, for now, I think that we're going to for basically today, we've closed above all three of the Vantage Point predicted moving averages, and I believe that to be somewhat of a bullish sign. Now, what we can do here is we're going to go into our daily report from Vantage Point and try and narrow down this entry point. Now, looking at the daily report from Vantage Point, we have two consecutive down days. We have the neural index up tomorrow, 193.61, 201.74 for the high. So for tomorrow, we're going to look for a slight pullback towards this 194 area to enter into a buy position. Now, looking at the short-term predicted difference, we've gone from negative 12 to positive 61. That's a very good sign for the upward momentum. We've again gone from 3.35 to 2.54 and 0.37 to negative 1.09. Now that one is not supportive, but the other two, the short and the predicted short and medium term differences are very supportive of this move. So for now, we're going to use the 194 area to get into long positions. And again, we're going to be looking for a move towards this 201.74 area. Now, looking closer at cotton, I believe that there'll be further demand for cotton. I'm not sure that, hedging your positions in cotton is a great idea. I would expect in the days and weeks ahead, a return to somewhere between 210 and 220, and potentially in the weeks and months ahead, considerably higher towards 240, maybe even 250. So for you short-term intraday traders, you've got the outlook for tomorrow. But for your medium to longer term traders, again, I think we're looking at a minimum of a return to the 210, 215 area. So that's our first position for tomorrow. Now our second position for tonight is going to be in the 10-year US Treasury notes. Now this one's interesting. As you remember from the Forex Weekly Outlook, my opinion is that the dollar is pretty much a sleeping giant here, and that it's just getting ready to potentially break out. Now these 10-year notes support that theory. Normally when you have the 10-year US Treasury notes moving higher, the dollar moving lower, and vice versa. So in this particular case, we can see here that our predicted MACD, our predicted true strength indicator, both have crossed the trigger to the downside. Now, looking at our key crossovers here, our short-term crossover is pretty much flat. Our medium crossover is clearly to the downside, and our long-term crossover also fully supportive. So looking at this, we can identify that we want to sell this into strength. So from here, we're going to go into our daily report. And again, there is going to be some volatility this week. But again, my opinion is that the Fed is getting a little more hawkish than what most would expect. Now, we've got a bit of a mixed signal here on the neural index, a couple of up days, a down day, then an up day. Now tomorrow we're looking at a down day yet again. So 119.05, 118.16 is our range for tomorrow. So for tomorrow, any strength, essentially what we're looking to do here is sell into that strength. Now what I also like to do is review the closing prices, because again, that can be very, very important in giving us an indication of what's happening here. So We're 118.31, 119.07, and then we've closed at 118.24. So again, the bearish bias remains intact there. So for tomorrow, a move towards the 119.05, we're going to use that to set our short positions. And then again, your intraday traders, short-term traders, they're going to be looking at the 118.16 area, but your medium to longer term traders, again, if we go back and look at this chart, I think we have room to extend much lower than 118.16, potentially even down to the 116 area. So that is definitely something you want to keep in the back of your head when you're trading this, whether it be intraday, scalping, medium, long term. There's some decent opportunity here. Now, another thing you want to do is if you're trading the 10-year US Treasury notes, you want to keep a very close eye on that US dollar index because it's a leading indicator as to what's going to happen to these 10-year notes, in my respectful opinion. So those are the market positions for April the 6th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.